Let's talk about the volume. All right, so what even is volume? So volume is just the total amount of an asset that has been bought and sold during a specific time period. This means that it's just counting the total number of coins or contracts that have exchanged hands. Here's an analogy. So imagine a real life marketplace, a specific marketplace for apples. There are two market participants, okay? So we've got the apple sellers and we also have the apple buyers. So here's a question. What is the volume of apples in the past 24 hours? The answer is just however many apples were traded in the past 24 hours. That's it, right? So the volume in this case is 6 apples because we've got 1, 2, 3, 4, 5, 6. All right, so by default, on TradingView, the volume might appear like something like this on your chart. If you don't have volume on your chart, you can just search for volume in the indicators tab in the upper toolbar and just search for volume and click this one where it literally just says volume and nothing else. And it should add this. Now, what you may notice straight away is that the volume bars actually overlap on top of the price, and it can be a little bit hard to see both the volume and the price together like this. So what you can do is you can just click on the volume, right click, and then press this one, move to new pane below. And that's just going to separate the volume from the price. Just going to make your life easier. Now, if I was to ask the question, how much volume happened on this specific candle, I just have to hover my mouse over it. And then whatever the number shows in this area, I'm just going to highlight it so you know what we're looking at. This blue, whatever the number is here, that's how many coins were transacted for that specific bar. So I'm just going to hover my mouse over it now. You can see in that corner of volume, it's going to show 291.1K. That doesn't mean $291,000. That means 291.1 thousand Bitcoin have transacted or exchanged hands throughout this window of time. Here's something that most traders get completely wrong about the volume. So they think the green volume bars means that there was more buying than selling that occurred during this specific window of time. And they think that the red bars mean the opposite, that this is just strictly sell volume or something like that, something related to selling. But actually, this is not the case. This is absolutely not the case. These colors for the volume bars are only there for aesthetic reasons only. They don't actually mean anything. So how the code works for just the default volume indicator is it's going to show a green volume bar if the price just so happened to be up on that specific candle. And if the candle is red or it's a down candle, then the volume will also show as red. But that doesn't always necessarily mean that more selling has occurred than buying, or more buying has occurred than selling. So this is why by default I actually prefer to keep my the color scheme for my volume as black, like everything is black. Because this just helps remove a lot of confusion and unnecessary complexity. So you might be thinking, well, hold on, how could price possibly go down when there are more buyers than sellers? That doesn't make sense. So let me explain. The way that the market works is like an auction. So I'm going to quickly try to draw out the order book here. So imagine, actually, you know what? I'm going to do it from here. It's just going to make more sense. Let me get a vertical line going. There we go. So this is where price currently is, right here. Below, wherever the last traded price is, so this line, there are people willing to buy, right? So there are people bidding with limit buy orders below this point. Above this point, we have people quoting with limit sell orders. So their order is on the offer. So everything below here are the bids, and everything above here is or are the offers. There we go. Okay, so imagine that the bids are absolutely tiny, and imagine that the asks are absolutely enormous, right? So imagine that someone someone goes and buys $10 million worth of Bitcoin, but there are people willing to sell. So there are giant limit sell orders resting on the order book, and let's pretend that they're all $50 million each. So if someone market buys 10 million, it barely even pushes the price up. You know what? Let me just use a different color. I'll use green. There we go. So someone market buys $10 million worth of Bitcoin, it simply won't budge the price at all because there are huge limit sell orders on the order book. But if someone goes and dumps just a tiny smidgen amount of Bitcoin, let's say someone just clicks market sell for 1 million, 1 million USD worth of Bitcoin, but on the order book, there's barely anyone buying. Let's say people are only buying at each, let's pretend at each price point, there is only $100,000 of bids. If someone was to click market sell for $1 million, they would just swipe through the entire order book because they'll eat through all of the demand there. Then their order will eat through all of the demand there, and so on and so forth until the entire 1 million is filled. So even though there was a giant imbalance between how much was market bought, so how much was market bought? 10. Let me just bring out the text tool. 1 second. So 10 million was market bought, and only 1 million was market sold. But because there is such a huge imbalance in the limit orders, it doesn't matter that there was more bought than sold. Price can still potentially go down. So if I'm not looking at the color of the volume bars, what am I actually paying attention to? So there are two main things. We've got the slope of the volume, and I'm also looking at outlier spikes. Let's talk about the slope first. So the slope can show how strong or weak a recent move is. If the volume is increasing over time, that means the move is strong. If the volume is decreasing over time, that means the move is weak. But if the slope of the volume is flat and it doesn't look like it's increasing or decreasing, that means that the strength of the move is not really that strong, but it's not really that weak either. It's kind of somewhere in the middle. Let's go through some chart examples. So here we have a pretty big trend in Audi, and as you can see, the volume is massively increasing over time. So look how wild and insane this trend is, and then just look at the slope of the volume. How we can measure the slope of the volume is you just pick the starting point of this giant staircase, which would be this. Look at where price currently is now, and then just compare the volumes. So we've noticeably got some kind of increasing slope there. And that is generally good for breakouts. Now, if we were to look a little bit further on the left-hand side, here volume is pretty much flat. And look at how that's reflected in the price action. It's generally sideways and chopping around, not really doing anything. Here's another example in 10,000 sats. Look at the volume, noticeably increasing over time, and look at how that's reflected in the price action. It's basically just breaking through every single resistance level. Cleanly, too. This means that anyone who is trying to short resistance and play against the trend, they would just get stopped out continuously. Like if your strategy throughout this entire time was, I want to short resistance, you would have lost here, you would have lost here, you would have lost here, okay, maybe that would have maybe questionable, but probably not. You'd probably lose that too. Here, you would actually win this one because price came into the level and actually turned around. So you'd win there, and then here we don't know. But for the most part, shorting resistance during this entire period of time would have been very problematic. Therefore, the opposite is true. If you were getting long at resistance every single time, you would have won this trade, you would have won this trade, you would have won this trade, and this one and this one. Here you would have lost, and then here on this one, well, if you happen to take something that looks like this, maybe you would still be in the trade. If I was to look back on the left-hand side, I'm just trying to find a choppy window of time. So yeah, look at this price action, and then look at how that's reflected in the volume. Price isn't really going anywhere, and neither is the volume. Volume is pretty much flat. Let's just find another one. Yeah, let's look at this. So again, see, look at how the price action looks like. And then look at the volume. It's like decreasing here, and then it just basically flattens out and dies, and doesn't really do much. Here's another example in Bless, but we're working with a really big downtrend. Take a look at how price reacts at pretty much every support level. It just breaks through every single time. Here, buyers barely stepped in, barely, and price just collapsed, went to the new lows. Again, buyers didn't step in, it just kept bleeding, kept bleeding, kept bleeding, kept bleeding. So this is a very strong downtrend, and look at how the volume looked like throughout this entire window of time. Mainly increasing. Mainly increasing. Yeah, there was a bit of a period here where it kind of got a bit dull. And that's actually reflected in the price action as well. Like, look at this. Volume is decreasing here by quite a bit, and then it kind of flattens out during the exact same period of time where price was not trending and was more range bound. Here's another example with ENG. So again, let's look at the price action. How is price behaving at these highs? It is pretty much breaking through every single one cleanly. So very strong bullish trend. Look at the volume increasing over time. And then if we were to just scroll forward just a little bit, look at how the slope of the volume is now decreasing. And then look at how the price action is behaving during this window of time. It's pretty much range bound. It's chopping around. It's not really doing anything too crazy. Whereas before, like before, this was a wild trend, right? And now sideways. So as a quick recap, when the slope of the volume is increasing, this is generally easier to trade breakouts, and it's going to be a little bit harder to trade reversals in that market condition. And it's pretty much the opposite for decreasing volume. So when the volume is decreasing, it's going to be a little bit harder to trade breakouts and a little bit easier to trade reversals. All right, that pretty much covers everything to do with the slope. Now let's talk about the outlier spikes. So an outlier spike is when there is an abnormally large pop or spike in the volume relative to whatever the average volume bar is currently showing. These spikes show very aggressive participation, a lot more than what normally goes on. And if we've got abnormal volume, it makes sense to also expect an abnormal reaction in price that follows it. Let's go through an example. So when we've got a price spike and a volume spike paired together, I actually really like this because this gives me a much higher chance of price reversing. So here in the red, that's the price spike and the volume spike. And then price just tumbles and returns back to the origin. When I say origin, I'm just referring to what was the original price before price spiked and went vertical. Let's go through some chart examples. So here we have an example in Pepe. The price action is generally quite choppy, sideways, not really doing that much. And here I've just drawn a support level, just a random support level. And as you can see, price spiked the level, so went vertical into the level. And there was also an accompanying spike in the volume as well. Notice how this volume up here is much higher than whatever the average volume is by at least 2 times. And then what price did is it quickly ended up reverting and returning back to that point of origin before the spike. Here's another example in Sui. So I'm doing it on replay mode this time just so you can see how price actually unfolds after hitting the level. So here I've just drawn a random resistance level. Look at how price approached the level, pretty much vertically spiked into it. So, okay, cool. That's the price spike. Now, look at the volume. Notice how the volume also spiked as well. So here we've got the spike in price and the spike in volume. So now let's see how price actually unfolds. Maybe I'll speed it up. There we go. So yeah, the whole point is these price plus volume spikes, when they are accompanying each other, they are useful to pay attention to because a lot of the time they can produce these kind of reversals. So if I'm betting on continuation, so as in I'm taking a momentum trade or I'm taking a breakout trade, so I'm getting long at resistance or short at support, then I want to avoid seeing the volume spike and the price spike together because that is not a fun combo when betting on the breakout. But if I'm betting on a reversal, then I love to see the spikes in price and volume together because they tend to revert quite often. Therefore, I would love to get short at resistance, right? Smiley face. I built a custom volume indicator and I'm going to show you how to set it up and get it up on your chart. And I'm also going to show you how I use it. So I actually have a Google Doc where I go step by step explaining exactly how to set up the indicator, and it literally takes less than 2 minutes. So I was thinking I'd just walk you through exactly how to set it up and we can go through it together. So step 1, we want to open up the PineScript tab on the right-hand side of TradingView. You're going to find that it looks like some kind of triangle shape. So right-hand side, when you hover your mouse over it, it's going to say Pine. So that's how you know that you've got it. Let me just start fresh so that my one is going to look like your one. There we go. So when you open up a brand new Pine editor, it should look something like this. All right, step 2, let's create a new script. So we just have to click the title and then press create new and then click indicator. Very easy. So click on here, create new, indicator. Done. If you've clicked on it and then your screen kind of whites out like this and you can't click and type in it, that's fine. This is just a little glitch. Just close it, reopen it, and you'll be able to see it again like normal. Okay, step 3, we just want to copy paste the code. So here's all of the code for the custom volume indicator. There we go. You just want to click and drag all of it and then copy and paste it. And it should look something like this. Yep. All right, step 4, we want to save the indicator. So go up to the top, click the title, and then just click save. Save script. And at this point, you can edit the name of the indicator to whatever you want. After you save it, you'll be able to select it again from the My Scripts section in your indicators. This just makes life a little bit more convenient and easy for you. Okay, after we've saved it, then we just have to click Add to Chart. So, done. Cool. And this is how it should look like. Okay, easy. How fast was that? Okay, now let me explain the functions of the indicator. So let's start with what is the red stuff and what is the blue stuff on the indicator. So there's nothing super fancy-pantsy about the red and blue stuff on the indicator. These are just two EMAs, exponential moving averages, which are just slapped right on top of the volume. Oh, and by the way, this is showing volume in USD, not in contracts. Okay, so the red just means that whatever the average volume is at the time, it's going down over time. And you can set the parameters for your EMA lengths to whatever you want. So I've put a 60 and a 240. There's nothing magical about these numbers. This is just showing the fast EMA has a 60 look back window and the slow one is just 240, but you can customize it to whatever you want. Yeah, so if it's red, it's decreasing over time. If it's blue, it just means that it's increasing over time. Do these things have predictive power? I wouldn't go as far to say that. It's just, this tool is just a visual aid to make just looking at the volume a little bit easier. That's all it is. So it shows you the slope. Is it increasing or is it decreasing? And the other thing that it shows you is outlier spikes. So an outlier spike, how I've defined it, is if the volume that comes in on a certain bar is 5 times or greater, 5 times more than whatever the average volume is at the time, it's going to show as an outlier. So it's trying to detect what is an abnormally large amount of volume that has just come through. Now, the reason why I like to have these very clear, very easy to spot, but something that I've noticed is that whenever there is a very large spike in the volume, and it's also paired with a very large vertical spike in the price action can sometimes revert all the way back to the very origin of that spike. So right where the spike came from. So that's why I like to have these the outlier spikes in there. But yeah, that pretty much explains the tool. Oh, and in terms of customization, you can customize everything to whatever you want. Like you can set this up to having it like as a dotted line, or you can throw in whatever colors you want. But yeah, I just built something that is convenient for me, and you can go and use it in whatever way you want.